It goes back to the reminder of October 2014. Remember back then, we had a peak-to-trough move of about 10% in the S&P 500. There were a lot of vague reasons on why we had that move and then the snapback. And I think the same is true today. I mean, certainly we have issues that are out in front of us. We have emerging markets. We have China. Is the commodity collapse really due to supply, or is it slow growth? Valuations of stocks here in the U.S., all these things. But keep in mind, everything I just mentioned are issues that we've known about for a very long time. So at the end of the day, there's nothing new under the sun. I think a lot of this is just sentiment coming out just like it did in October. And there's a big discrepancy between the sentiment and the fundamentals of the market.
Do you think we can correlate this with any other situation that we've seen before? I mean, this streak of sort of market weakness without any clear fundamental indicator?
Oh, boy. Well, I mentioned October of 2014 as a fresh reminder of, how sentiment can really be ugly in a market. People think, oh, no, we're driven by fundamentals. But not really. In the short term, it's sentiment. And that's true with the commodities. I look at the oil price. I mean, back in January, I still felt like the average oil price, $48 a barrel. It looked like I was a goat for a very long time as it rallied past that. And now it's below that. But the fundamentals are not matching up to the sentiment right now. It's just going to take a while to work itself through the system.
Larry, Tony Davison here. You talk about October of last year and the moves there, but we've seen the VIX now at levels not since 2011, like it's been a significant spike in volatility. So would it be fair to read through that volatility is evidently, obviously, a lot higher now? But just an interesting point I picked up the other day, and I don't know whether it's still the case, actually, that the volatility futures curve was showing some backwardation. So front months were pretty showing, obviously, an elevated level, but future months we were expecting the volatility to abate. Is that still the case at the moment, or are we looking for this to persist for some time?
That is a great point. And what I can remember last year, 2014, the VIX, I think it topped out at about 32, which really is nothing compared to what we saw in 2008, 2009. And clearly you're right. And I think part and parcel of that is that we're seeing asset class volatility, not just equity market, but rate vol, FX vol, commodity vol, all elevated at this point. And so, that's clearly different. And, history doesn't necessarily repeat itself exactly, but I'm making the point where, volatility is definitely higher now than it was last October. However, I still don't see a clear reason why we're dropping as much as we are, given the discrepancy between the fundamentals and sentiment.
And that's a really important point, because we're seeing that here in our local market as well. This is not really about fundamentals at all. This is just herd mentality. People selling and throwing things out for the sake of it. What I think is different, or my perception on what's different since October versus now, is obviously commodities. And commodities have just been one-way traffic now for such a long period of time. At what point do you think we find a natural bottom in the commodities market, and what do you think could be a catalyst where we start to sort of turn things around?
Oh, man, I think, it's always darkest before dawn. I mean, that's the best I can say. And you speaking from Australia, you know better than to just say commodities, but that's what we say in the U.S., because there's clearly a difference between iron ore and copper, oil, et cetera. But I know you know that quite well. I do think things could get a lot darker and darker before dawn, because right now, not only is sentiment ruling the roost, but the fact is nobody in the world is achieving escape velocity. I mean, I think that's what the sentiment is being driven on. Also, we have to keep in mind that cost curves, not along all commodities, but a lot of commodities, cost curves are getting pushed down and pushed down quite well. That actually doesn't affect the near-term effects more than it does long-term effects. So I think near-term we're going to see some very washed-out markets with probably a good time to start bottom fishing.
Larry, you mentioned there the discrepancy between, I guess, sentiment and those fundamentals. Do you think that the declines that we have been seeing recently in equities does represent some good buying opportunities?
Yes, I do. I absolutely do. It's so funny. You know, here in the U.S., everybody was clamoring, saying like 16 times valuation was fairly priced, not a big deal, it's okay. Earnings growth justifies that. Now all of a sudden everybody's saying 14 is too expensive. So, yeah, I do. But I think it's a great time to act like a shareholder, a real investor, and not like a trader. And one thing I mean by that is just to be completely diversified as you can. I mean, I still happen to really like materials and financials, and you know, it's a hard pill to swallow right now, but I still maintain long term it's a good place to be. I still would look at fundamentals, look at valuations, anything sub 14 times, a good place to be. I like Visa, JP Morgan. In the technology space, I kind of sort of like Google, but other than that, I kind of stay away. When it comes to industrials, especially in the metals complex, I do think anything related to copper does have a good chance of bouncing back over the second half of 2015.
Larry, obviously the focus now shifting towards the Fed. Investors increasingly sceptical about the Fed raising those rates in September amid all of this global turmoil. In fact, you've actually recently shifted your base case for Fed liftoff to December. Why is that?
Yes. Yeah, you know, this is the second time on Sky I've done that. The night before, I shifted from June to September, now from September to December. So you might stop having me on the TV show. But, yeah, I just think that the Fed has made some nuanced reporting, some like innuendos that they're clearly watching international developments. They're watching the health of the financial system. And given this route we've had, it's hard for me to believe that they're going to raise rates. And we look at Fed futures implying a 20% chance that they're going to raise in September. I so wish they would, but I think we can make that symbolic rate hike. But I do shift my my conviction to December of 2015.